This is a Sabre Limited expert series video, and today I want to answer the question, should I run my ERP system, my new and old ERP system, in parallel? So let's get into it. Should I run my new and old ERP system in parallel? I think it's a really legitimate question. Just before I get too far into this video, my name is Rob Jolliffe. I'm an expert in Microsoft Dynamics Business Central and supply chain and manufacturing. If you're watching this video, if you come and found the Sabre Limited channel, we tend to be focused on manufacturing companies. And so I'm kind of assuming that you might be a manufacturer, and I'll use manufacturing examples. And I'm also assuming that you're looking at a mid-market ERP. You're not looking at a $50 million SAP system. Because I don't know if this is relevant in that space. I'm talking about the $100,000 ish. Maybe two or double that or half that price ERP systems that are in the mid-market. If you like this video, if you're interested in the other videos in our YouTube channel and you'd like to have a chat with me, there is a link to my calendar in the description. Please leave a note for me when you book. You could just easily book into my calendar, and then I'll be ready to have a conversation with you. It's very helpful if you put in some notes explaining what you'd like to talk about. It gives me a bit of a chance to do some research and be prepared for our call. So the question is, should I run in parallel? For some time after my go live is generally when we're talking about. We're going to pull the trigger, we're going to turn the new system on. Should I run my old system in parallel with the new system? My go-to answer is no. I don't think that's a very good idea. I think it has a lot of flaws, and I think the most important thing to answer those questions as to why no is my answer is to look at why we might do it. And I thought of 4 reasons that clients might decide to do this. The one question is that they don't trust the new ERP system, and they want to be able to fall back to the old system. So they want to run both in parallel, because sometime after turning the new system on, if they discover some massive problem with it, then they have the old system is still up to date and they can keep using it. A second reason, which is not exactly the same, is you want to compare the before and after. In other words, you really want to just double check that the new ERP system is set up correctly, and running in parallel seems like a really good way of doing that. In general, it feels like a good idea. You don't even know why exactly you want to do it. It just feels like, oh, that makes sense. It would be the logical thing to do. And the last point, which is kind of similar to the second one, but it's the only real way to check everything, because the only way for me to know that the whole system's working is to run entire processes through it in a significant enough quantity that I can tell it's working. So item number 1, you don't trust the new ERP, and you want to be able to fall back if the new ERP system isn't working. So if you don't think your new ERP system is ready for go live and you don't trust it, don't go live. I don't think there's anything more to say about it than that. You need to test it enough so that this is not the reason. You cannot have the reason being, I don't trust this ERP, I don't think it's going to work. At that point, don't go live with it. If you're at that point where you don't think it's going to work, running in parallel isn't going to tell you anything. You already don't think it's going to work. Running in parallel is probably just going to prove it won't work. So just delay your project and go live later when you're ready. And by the way, I think that running in parallel is a sort of a shortcut to accelerating a go live. You think that if I go live with the new ERP system and run it in parallel, it'll push people to get more of the system used, but actually it won't. So we'll get into that a little bit later. So the second reason is you do think you're ready to go live, but you want to compare the before and after. You feel like this is a good way of checking that the new ERP system is ready. Now, I'm going to distinguish this from the last bullet, which is that it's the only way. Maybe you don't think it's the only way, but you just think it's a good way to do it. So I've seen this done about 4 or 5 times in my career. Most clients, when they get close to it, after I've tried to talk them out of it, they kind of get it and they begin realizing how much work it would be. But I have seen clients just say, no, I'm going to do it. It doesn't matter whether you think it's a good idea or a bad idea. 100% of those clients found that the before and after did not match. So the old ERP system and the new ERP system were not in balance. They didn't add up to exactly the same numbers, okay? And 75% of those errors, in all of them, it wasn't just one of them, it's all 4 or 5 that did this, 75% of the differences or errors they found were in their old system. People had made mistakes, like they put the wrong date on a shipment, or they put the wrong date on an invoice, or they put the wrong GL account in a posting, etc., in the old system, not the new one. The new one was actually correct because users are really comfortable in the old system. They tend to go faster, and they tend to be, they're feeling good. They're thinking, oh, I know what I'm doing. But studies have shown that as much as 3% of manually entered data contains errors, and that probably might scare you if you're a business owner and you're watching this video and you're thinking, wait, my people don't make that many mistakes. And they do. They actually do make that many mistakes. But they're making more errors in the old system because they're going to be more cautious in the new system, and it's scary and they don't know. And so they're going to really spend their time. I will say that all ERP systems, your old one and your new one, whatever they are, they have checks and balances in them that are intended to detect those errors and give people sort of information so that they know that the mistake's being made. And that goes to double entry accounting, which is entirely designed so that it traps those errors and sort of reveals them. And it goes to things like reconciliations of sales and purchasing and order customer statements, and all of the rest of that are all designed to catch the errors that are in the system. So there will be errors, but they will mostly be caught. The difference is that the errors in the two systems will be in different places. So you will have errors that occurred in the old system in, let's say, I'm going to say purchasing, and errors that occurred in the new system in sales. They're not significant, they're not material, but they cause things not to match up. And because they don't match up, just as an example, somebody put a purchase order at the end of June and then they re-entered it in the new system, and they realized, oh, the end of June was the wrong date. I'll put July 1st in as the right date for this. So now you run your purchasing for June and you're purchasing for July in the two systems, and they're different, and you're going to spend all your time trying to figure out why they're different. And when you do find, by the way, that the one purchase order was put in on 2 different dates in the 2 systems, again, who made the mistake? Well, the mistake could have just as easily been in the old system. So the third point is, it just feels good. It feels good. I feel safer. I feel good about doing it. I don't really think that I need to say much about this. Like, I don't feel that I need to say much about it. You have to trust your ERP team. If you're the business owner and they're saying to you, we don't need to run in parallel, don't push them to run in parallel. It's an enormous amount of work. It's almost never going to be a good idea. And let me give you an example. Okay. So at the end of, I had a client who tried this. And at the end of the second month, the customer finally had time to do that side-by-side comparison. Of course, they were checking their accounts receivable, and they were checking their accounts pay. They were checking a lot of stuff in the systems to make sure that they both matched up from an accounting point of view. But they finally took the step back, and at the end of the second month, they had the time to look at all of the different departments. And nobody in purchasing was using the new system because they ran into an issue. And it made it hard to use the new system, but they never reported it to IT because IT was busy dealing with all the other issues, which were creating a lot of false positives. There's a lot of reported issues of, well, the system is not collecting the sales. Sales are different in the two. So then the IT department is going into the sales and saying, oh, well, it's because so-and-so put this sale in June and the same one was put in July 1st, which is wrong. And then that's just consuming people's time. So purchasing had these problems, couldn't get a really quick response because people are looking at everything else, and they just decided, oh, screw it, I'm not going to use purchasing. So they planned on catching up before the end of that second month, and they never had time. So it took 9 months for this client to synchronize everything and get everything back caught up. Because they lost that month and a half of purchasing, they actually ended up having to continue to run the two systems in parallel for 9 months. They hired 3 full-time people as like co-ops or part-timers to keep up with the data entry requirements of running 2 systems at the same time. Now, they're a pretty big company. They had I think they had 25 full users of ERP, but they increased their staffing by 10% just to be able to do this. So frankly, I think they should have just started over and thrown what they had done out. But that was based on, I just feel like that's a good idea. They didn't have really specific reasons to do it, but I think this is it's a good explanation of how that good idea can become like have unexpected consequences. And in this case, it was the team had the option to revert to the old ERP, and when they faced even the slightest challenge, they reverted to that old ERP, and then that caused this. Okay, the fourth choice is, or the fourth reason people say it's because it's the only way to really check my system. Hint: it is not the only way to check your system. So by the same logic, if you bought a new CNC machine and you're going to start producing parts on it, what you should do is you should run all the parts on your old CNC machine, or half the parts on your old one and half on the new one, and check every part to make sure they all match. That makes no sense. Nobody would do that. You would run 2, 3, 4 parts on the new CNC machine, make sure that they're good, have a fixture table to test them, whatever it is, test fixture, and you would know that it's producing good parts. And then maybe during the first, couple of days of using it, because you're worried about it for some reason, you're going to check every other part, or every 10th part, and then every 10th, and then every 50th, and then every 100th. But eventually you're just going to say, I don't need to check all of them anymore. And you should use the same model. So this is what we call a pilot. And in a pilot, it's a limited parallel run. So it's kind of like running in parallel, but you're not running everything in parallel. What you're doing is you're taking a few of each samples of real ERP orders, real orders from your existing system, and you're running them again through the new system. Now, because you have so few, you can look at them one at a time, and it'll, like, if somebody put a date in that's off by a little bit, it won't really throw the information off, because you're just looking at the order. I'm saying, okay, this order I sold, and it had a gross margin of $10,000 in my old system, and I sold it this way, and this is how it hit the general ledger. Which, by the way, one other note is quite often you change those things. So you want it to hit the general ledger a different way because you're upgrading your ERP and you want it to do something different. So that's another area where it can be tricky to reconcile two systems. So you've got one order, you run it through the new system, and it comes up with the same gross margin, and it hits the same GL accounts, and it creates the same invoice, and you deposit the check the same way, and the taxes come out the same, and you're like, oh, okay, how many more of this exact type of order do I have to run to prove that the system works correctly? It's like your CNC machine. You don't have to make 10,000 parts and check every one of them. Once you've done the first 2 or 3 samples that are legitimately unique, you're good. So you compare those samples that you got to the original data, and when all the samples are working, so you have to pull, like, okay, maybe you do that type of order and you do another order, you do spare parts orders, and you sell machine builds and you have to do projects, or maybe you do volume repetitive, or you have a configured order, an assembly department, and you do some assembly, and you do some components that you sell, so you have to pull the samples of every style of order, every type of process it runs through. If you imagine having a flow chart for each type of order that goes through your business, you might have 5 or 6 different flow charts. You need to run a sample of each of those, so it might be 3 or 4. It serves nothing, as I said, to test hundreds of samples that are identical, which is what happens when you try and run the entire system in parallel. So you run your 3 to 5 samples of each type of order through. Everybody confirms that they're working. You pull the switch, you put the system in, you run in parallel, but not everybody running in parallel doing everything. You just run enough in parallel that you can confirm that it's working. So, summary. Generally, don't run in parallel. It's not a value-added thing. It doesn't help. It ends up, causing more problems than it solves. So if you're not ready to go live, don't go live. That's number one. If you're thinking I have to run in parallel because I don't think I'm ready to go live, don't go live. The user errors are going to occur more in the old system than the new system. I'm 100% convinced of that through my years of working with clients. I've had clients, and the scariest thing clients ever say to me is, my users don't make errors. Of course, people make mistakes. Everybody makes mistakes, but what they're most comfortable with is where they're going to make the most mistakes. Users will sometimes just revert to the old system if there's too much of a challenge in using the new system. If there's something preventing them, they're just going to go and use the old system. And if you give them that capability and you say, yeah, you're allowed to do that, then they will. And as soon as you've done that, you've skewed your tests, and you'll never have it go smoothly at that point. Proper testing that runs through all of these different sample types and all of the different orders are going to be everything that you need to do. And the last thing to note is if you do have a huge problem, you're going to be able to revert within a week. You just don't file your orders in wherever you normally file them, leave them on people's desks. And then at the end of the first week, go in and check and make sure that there is no obvious massive problem that's occurring. And then once you've got that point, it's like, okay, everybody, you can go file all your paperwork away, wherever it's supposed to go. We're comfortable with the system working. I think I'll just say one more thing about this summary. I have only once encountered an environment where at the end of the first month, we decided to stop and go again. And it was because there were a couple of missed things, but it wasn't that big of a deal for the client. It was very clear, and it had to do with inventory, and it had to do with the client's initial data load of inventory. So it wasn't the ERP system wasn't working correctly. It was that when they loaded the data into it, there were some errors made that they didn't discover until a few weeks in. And we just decided it would be faster to just redo the inventory load and redo the go live. However, the orders they put in were fine. The purchase orders they put in were fine. All of that stuff was fine. We just redid all of the opening balances and started over again. It really didn't have that much of an effect on them. And it wasn't as daunting as they had to rekey every single thing. So, I hope you like this, and, if you're interested in these videos, if you enjoy this video, we'd love you to subscribe, and follow our channel. You can ring the bell icon to be informed of new videos. And of course, whenever you, subscribe to our channel, you're helping, promote us in YouTube, help other people find these videos. So if you found them useful, this is a great way to kind of, mark them so other people might be able to find them in the future. You can reach us at www.sabrelimited.com. You can email me at sales@sabrelimited.com, and you can reach me on LinkedIn at LinkedIn/IN/Rob Jolliffe. Thanks so much for watching my video, and I look forward to seeing you soon.